right, ladies and gentlemen. Well, let's get started. My name is Ryan Cobbins, and I'm with the Energize Colorado Gap Fund. The Energize Colorado Gap Fund is proud to bring you the Energize Community Program, providing funding readiness workshops, Gap Fund low interest loans, and an accelerator program to further your business. This program includes technical and business advisors to assist you with a broad range of issues facing our Colorado small businesses. Let me touch on our low interest loans as well, which is funding up to $20,000 with 3-year terms, or 36 months, with an interest rate of only 2.5%. The funds can be used for payroll, rent, lease payments, utilities, debt consolidation, working capital, equipment, inventory, capital improvement, and also to refinance bad debt. This loan program is for businesses with fewer than 25 employees in the 3 geographical areas that include Pueblo, Southwest Denver, East Colfax, and then also childcare from around the state. Over the course of the next month, we'll be bringing you an assortment of workshops to better prepare you to apply for the Gap Fund loan, in addition to other opportunities around the state. And so throughout the course of the month, we'll have some additional calls that'll really outline what some of those other funding opportunities are. And real quick, I know we have folks that are just joining the call. Let me see if I can find this link, because one of the things that I want to do from the start is I want to post this link in the chat room. And so one of the first action pieces that I want us to do, and I believe it looks like Kanita posted that, but I want to be able to, that's a long link, but I want to make sure that folks sign up to be on our wait list for our Gap Fund loan program. I would take a second, do that now. Don't worry about whether or not you have all of the requirements in order. That's the exciting thing about this program, which is our workshops that are designed to really walk you through the documents that you need in order to apply, not just for our Gap Fund loans, but other opportunities as well. And so my last note is just letting you know that we're here to help. I'm going to right now turn it over to Brian Estrada. Brian is the Executive Director of the Southern Colorado Small Business Development Center. And he's one of those folks, out of all the folks that I know, that's always willing to help. And so our Energize Colorado family welcomes him, and we appreciate him taking the time to really go through some of the financial documents that you need in order to apply, again, not just for our Gap Fund loan program, but for other funding opportunities as well. And so, Brian, I will turn it over to you. I'm going to turn my screen off as well, so folks can focus on you. And if you need anything, I'll be right here.
Sounds good. Thank you, Ryan. And thank you to Energize Colorado for having me. As Ryan said, my name is Brian Estrada, and I am the Executive Director for the Southern Colorado SBD Center. And we're one of the areas for, well, I'm actually located in Pueblo, Colorado, and we're actually one of the 4 quadrants for the Gap Fund that we're talking about today. So I am getting ready to share my screen here, so give me just a second. Kanitha and Rebecca, it says that someone else is still sharing, and I do not see that I'm sharing.
You should be good to go now.
Let me try it here. All right, now we are ready. All right, so we are going to talk about financial statements today. So broke this down and calling it Financial Statements 101 for everyone. So I want to make sure that we keep the basic information there for you. So what we're going to talk about there, when we talk about financial statements, we generally are thinking about the financial statements of a profit and loss statement, a balance sheet, and your projected financials, okay? So let me just start this correctly here for everyone. Okay. Hold on, my computer's being slow, everyone, so I apologize. All right, so today we are, whoops, I skipped too many slides. No, I didn't. Okay, today we're going to talk about the profit and loss statement. If you join us on Thursday, we're going to go over the balance sheet and projected financials. Okay, so the main reason that financial statements are created, it's for two primary reasons. The first one is IRS reporting. And our main goal as business owners and advisors and things like that is to stay out of the IRS's, for lack of a better term, crosshairs. You know, you just want to make sure that you stay out of trouble with the IRS. Okay, so in this session, what we are going to do is just cover some basics of what each of the statements are. If you go to any of the SBDCs for support, we can definitely help you with understanding profit and loss. Today, we're going to go over some examples. I'm going to give you some quick tips that we use in my center when consulting business owners to help make this process a little bit easier. All right. Okay, so the profit and loss statement is a summary of all business transactions made over any given period of time. When we look at a profit and loss statement, it covers a few things here. The first thing that it does is it reports how money flows in and out of your business over a specific period of time. It's, again, one of the most used reports for the businesses, for owners, for lenders, and tax preparers. It helps us to see if we're profitable. And then I'm going to talk a little bit more about where the numbers come from here in just a minute. Okay, so when we're looking at a profit and loss statement, this should be listed for only a given period of time. Generally, that's monthly statements. Sometimes we provide quarterly, but we want to keep track of monthly financial expenses, revenues, things that are coming in, so we can see if we're being profitable. And that way we can then forecast our future months and keep our information current. So when someone asks how our business is doing, or a loan officer is checking in with us, they're going to have questions. So this information, as long as we keep it current, you will be able to show them if your business is profitable, or you'll also know if you're losing money and if you've got to, the word that came out of the pandemic, pivot and make a few changes. It'll also tell you if a few things are that you may have on your product list, if they're not generating any revenue for you, and you may want to get rid of that. All right. So let's talk about a couple of different things that go on this statement. I'm not changing slides too much because I am going to show you an example here in just a minute. All right. But the first thing, let's break it down into three things. The profit and loss statement first shows the revenue. Okay, so there is a revenue section that's going to be on the top. All right, and then there also is an expense section. Okay, I'm going to go ahead and bring an example so you all can see what we are doing here. Just give me a second to switch my screens. Okay, so right now you should be looking at an example of a profit and loss statement. So it breaks it down into, like I said, we have a revenue section, we have an expense section, and then we have at the very bottom if we're making profit, loss, etc. So we're going to break this down a little bit further as we go through. Okay, like I said earlier, the profit and loss statement is one of the most used and most informative financial statements for business owners, lenders, and tax preparers. Okay. We're going to talk about a balance sheet too, and the way that you can tell the difference between a profit and loss statement is that it's going to say this covers a period of data for a particular sales center. So the way that we're going to look at this is when you look at your profit and loss statement, it should contain three main components here. First thing is company name, the profit and loss statement, and then what the year is, what the period that we're ending here, okay? We're gonna have some data that comes in beforehand that would say what our gross margin is, what we're expected to make our return on sales, okay? So that's our markup and the difference where we're gonna go from there. Then we break each of our sales categories down by products, services. We add all of that for our total sales revenue, okay? We have our cost of sales that we need to figure out what does it cost us to make this particular item, okay? These are our expenses, okay? So think we're making widgets, okay? And we have to have a different pieces for our widget. So these would all be expenses that would go in for our cost of sales. Also, we could think of our marketing, different things that would go in there. As we move, I'm sorry, I moved marketing into operating expenses. I'm moving too fast here. So then we look at what are our expenses throughout this information that we need to enter. So what is happening here is we can put advertising, direct marketing, any expense related to our business operations. Okay, then once we come down, we go ahead and add we have our revenues, we subtract all our expenses, and then that tells us if we have a net profit or loss. Okay, here's a different version of that. And then I'm going to go in and explain a little bit more and just do an overview of the profit and loss statement for you here in just a minute as well. Okay, this is a more detailed version of a profit and loss statement for you. Again, it gives you the formula, and we'll walk through that here in a little bit. And then I'm giving you a little cheat sheet here. So one of the things that my consultants do for businesses that are just starting up, we go ahead and we show them Schedule C, and you guys will get these documents in a follow-up email if you haven't already gotten them. But when we're setting up our chart of accounts, and we'll talk about that here in just a sec, it goes ahead and breaks down any of the expense categories. So if you can see in the middle where it says Part 2, it's showing expenses, and it breaks it down like advertising, car and truck expenses. So this can help you set up your chart of accounts when you are taking a look at getting your financial statements set up. All right, so let me switch back to this other screen here for us. Okay, so I did just a little overview of some different documents. I kind of went out of order on how I planned it, but I want to give you guys some more information about the actual profit and loss statement and where you should be with that. Okay, so when you're thinking about it, let's just break it down to some basic definitions for you. Okay, total revenue or money flowing into your business is what falls into your revenue section. After that, expenses or money flowing out of your business are totaled in the expense section. On the slide that's currently visible, you see a simplified equation. It's down in the right-hand corner. It says revenue minus expenses equals profit or net income, as however you want to list it, net income, profit, etc. Okay? As I mentioned, the profit and loss statement is one of the most used and most informative financial statements for business owners, lenders, and tax preparers because it provides a concise measurement of how well the business is performing. You can distinguish profit and loss, like I said, from a balance sheet because it will clearly state the period of time covered. So an example of that could be January 1st to January 31st, 2022 for a profit and loss statement, also referred to as an income statement for some individual businesses. If you have a point of sale system for your operation, your system should be able to print some of these out for you so that it can track. All of this information comes from the daily tracking of your transactions, bank statements, credit cards, invoices, and any other documents that you see there that you keep as records. But if you utilize your POS system for what it should be by keeping things up to date and entered in there, you should be able to run this report without any trouble. When you're thinking of a P&L, think of this P&L as what I call a flow document. It reports how money flows in and how it flows right back out of the business, okay? It helps you to make appropriate business decisions as you're moving forward. So you can see what's happening each month. You can also use it to go ahead and forecast, and it gives a good financial clear picture of what happens each month in your business. Okay, so when you look at it and you're saying, what does a profit and loss statement tell us? Okay, and basically the best answer that I can say in the most simplified form is it's telling you whether or not your business is making money or if it's losing it. Okay, if you're losing money, you need to take a look at what you are selling. What are your different revenue streams? Is the cost to make your products? Do you need to take a look at that and adjust that ability so that you can make that product cheaper? Okay, are you selling it for enough? Are you covering all the expenses? So it gives you a decent picture there. Okay, when you take this to a lender or to the IRS, they want to know what is happening in your business so that if it's a lender, they can make sure that they're making a good investment into your business if they're thinking of approving the loan. The IRS wants to make sure that they know what levels of sales you're making and that they're making sure to get their portion of that as well. And as I mentioned, it helps you to take a look at what products and services account for the majority of your revenue. Maybe you need to take a look at bringing more of that product or something similar. The things that aren't selling, let's run a sale and let's get those out of here, okay? So when you're trying to figure out where do all these numbers on the profit and loss statement come from that I showed you those quick examples of, okay? As I mentioned, they come from daily business transactions. You all know you need to document those throughout the day so that you can see where the sales are coming. They can be captured if you don't have a POS system. Some good things that are out there is good old Excel. There are still businesses that utilize Excel for their spreadsheet options. Others include QuickBooks or other types of software. What I recommend to small business owners quite often is if you can't afford something expensive and QuickBooks seems like it may be something that's too hard for you to learn at this point in time, I recommend getting a simplified point of sale system. You can look at Square. There's a couple of other brands out there. Square is one of the easiest ones to set up and utilize for individuals. And what I like about Square is it's portable as well, but it may not have all the needs for your business. So you would need to look at really what is your business and does it fit with what you're doing. Okay. Your POS systems can also help you with invoicing. So you can see what money's outstanding, what still needs to be collected. It can keep track of your bank statements, your credit card statements. So that's an overview of that. And now what I want to walk you through, and you may want to take some notes at this time. I didn't put it all in the slides, but I did make a quick overview of what the standard format includes for a profit and loss statement. But here are the main things that should always be included in that. The first thing is the name and the date. The name of the business enterprise and the time period covered should always be right there up at the top. So that way, when you're organizing a year of your income or profit and loss statements, your lender can take a quick look at them and see, all right, I've got January through December. Very easy to see right here. Okay, the next thing is your chart of accounts. Okay, along the left side of your document, normally when you set these up, as you saw in the example where it showed the different revenue streams, the different expense categories, and in my examples, it just said product, expense, product one or expense one. This is your chart of accounts. Every business should have a chart of accounts that is set up for all the lists of your expenses that are coming through. Okay, so you can customize them for your business any way that you see fit. So if you're a restaurant, you're gonna have food cost. You're gonna have paper goods. You're gonna have cleaning supplies. You're gonna have takeout items, catering items, however you break it out. You should customize it, as I said, and just make sure that these accounts reflect the way money enters a business, which are your revenue sections. So if you're a restaurant, you would want to, first you're going to want to break it up by every entree you sell. But when you're doing some of your reporting, you may want to say sit down restaurant food, like dine in, you can call it dine in. Then you could have a section that has takeout. If you sell shirts or hats, you can put that information. If you're fortunate enough to have a bar, you can go ahead and put your bar revenue. You can break it up any way that you need to see fit. That example that I gave you of Form 1040, let me get the name of that, the Schedule C form. That's a good starting point, and then you can customize that a little bit more general for you. Okay, always when you're setting up your expense accounts, I tell all my clients that they should make sure to distinguish variable expenses as opposed to fixed expenses. Okay, because fixed expenses are always going to be there. No matter how many sales you have, no matter what's happening for the business that day, we all know that we still had certain expenses during the pandemic. We still had to pay rent. We still had to run a few things. Then also have your list of variable expenses. These are the ones that you have a little bit more control over because you can see where you purchase those items, what is happening with your business, and then if you need to look for a new vendor so that you can help control those costs. Okay, you do have control over fixed costs as well, but you would have to go in and negotiate those, you know, such as rent, see what other fixed costs you would need. The main staff that you need to have on your floor, like you always need a manager. You may need a opening server, and you need to have a chef. So those are the things that always have to be there, but take a look at those, okay? Variable expenses, like I said, they increase proportionally as business activities increase or decrease. So you always want to be aware of those variable costs. And like I said, I'm using restaurants as an example. The price of milk, the price of dairy products fluctuates on a regular basis. We're all seeing an increase in delivery charges and things like that that come along with operating our business. So we want to make sure that we keep an eye on that, because we've also got to look at what we're selling our item for, because we're in business to make some money. Okay. So we want to make sure that we are covering our profit margin and that we're able to cover all those fixed expenses. Okay. When we think about other expenses, when you go to break on those operating or fixed expenses, again, take a good look at what you need. Okay. Some of those, like I said, rent, copiers, supply, you can think of travel, the main staff that you need. So you want to really look at what are those expenses that are always going to be there, and do they have to be there? You can look at some other options to change those items as well. Okay, the final part at the end, after we've gone through and we've recorded all our revenue, subtracted all our expenses, then we know if we have a net income. And I'm just going to stick with the net income portion because that's what we all want. We all want to make sure that when all is said and done, and the bottom line, that we have made a profit so that we can continue to do business, we can borrow money, we can take a look at expanding, possibly adding new items, purchasing new equipment, etc. with that. So for today, we are just going to go over the profit and loss statement. And then on Thursday, if you're all going to join, we will go over the balance sheet and the financial projections, okay? I'm gonna stop sharing this slide again, just so we can take a look at the other items that I went through quickly, and I can take any questions.
It looks like we just lost Brian, so we'll give him a second to rejoin. And in the meantime, are there any questions? And we'll watch the chat room until he gets back. I'll make a few comments. Some of the things that I have found helpful is using a platform such as QuickBooks to help with our financials. I'm a small business owner also, and so recognizing the challenges of our small businesses at any given time, playing the role of electrician, and then the next day you walk in, you're the plumber, the psychiatrist if you have staff. And so the challenges of actually doing your bookkeeping or accounting can be daunting and challenging. And so I have found, number one, keeping receipts and then importing those receipts into QuickBooks has been very helpful. And then once QuickBooks is set up, and outlined, using that as a way to create not just your income statement or profit and loss statement, and those are one of the same, and balance sheet. And so, Rebecca Kanita, I think Brian is trying to get to this side.
Yep, I promoted him to panelist. He should.
So we'll give him another second. And everybody has a different opinion on how to set up their financials. I remember getting started 12 years ago, and one of our accountants that I had that actually helped set up our chart of accounts, and that's what we used them for. We didn't have a whole lot of money. And so he set up the chart of accounts, showed me how to input things, and then over time, I just got better and better. And I also have been using the Small Business Development Center here in Denver for that same purpose. And we set up each line item of every item that we sold in our coffee shop. And so there was a line item for coffee, a line item for gelato, a line item for everything all the way down to espresso, to sandwiches, to burritos, to chips, to soups. Basically, all of our inventory items were a different line item in our chart of accounts. And so it wasn't until later that I realized that I have a invested in a point of sale system where I can actually pull a sales report that can provide me that information. And then I started just lumping everything under inventory, which for our accountant that works through our books, that suffices in terms of what taxes we need to file and so forth. And of course, I can compare that to our point of sale sales report. And so the other exciting thing is usually talking about things like this can be daunting. And so being able to use our technical advisors and business advisors is also helpful. Like I said, the main and primary purpose is let's get some folks in our communities loan and funding ready. And so,
So in the meantime, Brian's trying to join. I can go ahead and answer the question in the chat, which is, are there specific differences between a P&L for service, i.e. consulting or retail business? So you all don't know who I am, so I will go ahead and show myself. There we go. Hi, I'm Rebecca. I'm the program director for Energize Colorado. Good to see all of you. Hopefully we'll get Brian back here soon. But the actual P&L document is not different. So you want to have all of the same information on there, whether you're a service or a product-based business. The differences will be what you track, the services you track, the specific. You'll have very different variable costs versus fixed costs, because you may not have a physical space. You may have a car that you use or a truck. You may have, you know, website hosting or online programs that you're using versus having a physical space and needing products in your space. So the actual document will not be different. Just the way you list things will be. That's a great question. Thank you for that. What other questions do we have?
let me recap to the profit and loss statement. Here's a very simplified definition, which is taking your revenue or your sales minus your expenses, which then gives you either a net profit or a net loss. If you are in, for example, the service industry or other industries, you may have cost of goods as well. So in that case, you would take your revenue minus your cost of goods, minus your expenses, then leaves you with a net profit or a net loss. And so we'll hold for a second just to see if there are any other questions. And Rebecca, he may have been just about done. It sounded like he was wrapping up with his presentation.
Yeah, so we can hang out for a bit. Macy dropped in the chat the profit and loss handout that Brian provided. I also put in the chat a link to talk to one of our business advisors. So if you'd like help with these documents, if you just have a one-off question, or if you want to dig into financials and make sure you have everything ready for when to apply for the loan, please go ahead and join the EC Hub on that link I dropped in, and we will connect you with a business advisor who can help with this. Don't forget, Ryan also dropped a link in to sign up to get updates. And there it is again. You can sign up there to get updates. And then once you fill that out, you've actually signed up for the EC Hub, so you can connect with a business advisor if you'd like. So we'll hang out, but we are very happy to answer any other questions that you have. But in the meantime, fun to see that little face over there, and we will look out for you on Thursday to talk about balance sheets and financial projections. So I see a question here. Go ahead, Brian, you can get there.
Margaret asked, I've never applied for a loan before. Are these forms always required for all loans? It's tough to say all. Most of the loans and also grants that I've applied for have requested profit and loss statements for a period of time, and also a balance sheet for a period of time. And so the quick answer to that would, for me, is yes. And so I try my hardest to make sure I'm up to date on our profit and loss, and also balance sheet. In addition to that, in addition to applying for loans, what I've learned through the Small Business Development Center and through our business advisors and technical advisors is that by having financials up to date, and yes, it's more a lag measure, it comes after the month is ended, it does help making other decisions a little bit easier. And so your ability to invest in this or invest in that becomes a little bit easier. And so, but thanks for that question, Margaret.
Yeah. Brian, so glad you're back with us. We're just answering some questions around the P&L.
Right. I apologize. Internet issues in rural Colorado. So I apologize.
Maybe apply for a loan to pay for your internet. Look at that.
We need a new broadband up here in my little rural area. Yes, we do.
So,
we had gone through several questions, Brian, and answered those already. It sounded like you may have been close to wrapping up that piece of the presentation. And so was there anything else that you wanted, any additional information that you wanted to provide? And
not really at this time. So I'm kind of frazzled. I've never had it go out in the middle of a presentation, so I apologize, everyone.
You know, that's a good example of a small business in Colorado having to pivot 20 times a day, recognizing the important thing of getting, for example, our financial documents done, but then something else is grabbing our attention. So we'll call it an intention. So I'll kick it back over to Rebecca, and then I'll hang out for a minute.
Yeah, do you want to answer that other question that came in, Ryan?
Oh yeah. Let's see, if the applications are open in May, should our P&L be up to date through April then? And so, you know, one of the exciting things and the reasons why I love the Energize Colorado Gap Fund is the fact that we recognize the challenges that small businesses face. And I'm answering this in a very long way in the sense of saying, hey, you know, I would say in most loan products, say we want that window to be at least within 90 days. We'll have additional information that will kick out in terms of how close that needs to be. But if April could be done, that's great. Knowing that April just closed for a lot of folks in their accounting systems, it may be appropriate that February and or March are done. And so, yeah. All right.
So with that, we'll hang out for a minute, but feel free to drop off if you've had your questions answered. And thank you so much, Brian. That content was exactly what we need to get started on our P&Ls, and now we can get support moving forward. So we will leave it there.
Well, thanks again for having me. I apologize about that internet issue, everybody.
No worries. We'll see you Thursday.
Take care. Bye-bye.
Thank you, Brian.
Bye.
Thank you, guys.